All right, hello everyone. It's Tim Davis coming to you guys with another market review. Now we are into the weekend. Today is Sunday morning. It is October the 22nd, 2023, and I wanted to do this quick market review to show you guys what transpired over the past week and more, and what we could be in store for. I want to start off by taking a look at the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average, as it acts as a sentiment tool. Show us the overall breadth and sentiment of the market. And I'm going to start to erase some lines here too as well, some of these trend lines, because some of them have been violated and it doesn't like they are going to recover. So we are definitely, as I pointed out last week, we're definitely in a bearish state of this market. And we are in a definitely defined downtrend now, and looks like the bears are in full control. Bears in full control, with the bulls unable to take out and reach back up to some levels of resistance that it was flirting with a breakout above, but failed multiple times. I'm going to point that out. So back in the early part of August, here was a level that the bulls were trying to flirt with to try to break back above that level of resistance. But as you can see, it failed each time, and we're starting to break below levels of support. As you see here on this particular tool, which is also, bleeding over and showing over in our major indexes as well. And we'll get to that here in a second. But I wanted to show you the sentiment tool, show you that the overall sentiment is in a bearish state. And this tool, like I say, if we get below 50%, and we continue below 50%, that's telling you that the sentiment, overall breadth of the market is definitely negative. Overall sentiment is negative. Right now, this tool is showing about 31, just about 31% of S&P 500 companies are still above the 200-day moving average, meaning that about 70%, close to 70%, are below the 200-day moving average. And that is definitely bearish signal for the overall markets. Now, let's clean this up just a bit. So since this trend line has been violated, well, this one up here, this level of resistance has been rejected. Remove that. I don't think it's in play as of right now. And we'll leave this level here, this line here, as a level of resistance. There's a this diagonal trend line here. We'll leave that in play because I think we're going to be going down towards that level here in the near future, which would take this tool down to about 26 to 25%. So again, we are definitely in negative territory. The bears have definitely still got a stronghold of this market, in full control of this market. We're starting to see some oversold conditions, but we're not too oversold yet where we can't go lower. So keep that in mind. Again, if we get a bounce on this week, it could be muted. We could see a bounce, and we could see this tool move back up to about 34 to 35, which is where resistance is. And then I don't think the bulls are going to have too much oomph there to continue to push higher. So okay, that is the tool that tracks the stocks trading above the S&P 500 companies trading above the 200-day moving average. Let's move right to the VIX. We're gonna look at a couple different charts here. The VIX. This is our daily chart of the VIX, and as I pointed out last week and said it, just like the at the Dow, S&P, Nasdaq, and IWM, we're looking at breaking below levels of resistance. The VIX was looking at holding levels of support, and it did it, and it has done it just quite nicely. Here is our 50-day moving average, and look at that perfect bounce from that level back above the 200-day moving average, came back down to test the 200-day, and look what it did, bounce off the 200-day. So we're in a zigzag pattern higher on the VIX. It's our daily chart. here is a level of around a level of some support now, $20 level. VIX got above the $20 level. So that could act as a level of support here soon. So we're watching that as we trade through next week. That $20 level is a key level to pay close attention to. And the moving averages as well. See if we finally get a golden cross with the 50-day crossing above the 200-day. If that happens, then we're definitely off running for the VIX. So that's the key level to watch, that $20 level. If we pull back there, look for a possible bounce in the VIX again. Let's glance quickly at a long-term weekly chart and look at that, folks. There's a lot of strength in this VIX, and the longer-term charts are starting to show you how we pretty much found a strong level of support around the $13 level for quite a while, for several months, and it looks like we got that turned into a launching pad with the VIX now on the weekly chart approaching this 200-day moving average, and a pop above there, folks. It could be off and run to the races. We could see the VIX at $30 and no level if we get above that 200-day moving average on a weekly chart. And if we do get towards that $30 over the next couple of weeks, it will more than likely act as a level of resistance, but support levels are put in place, and resistance is, I think it's going to be broken eventually. We'll see some pullback if we get to that $30 level, back towards the moving averages, and then probably consolidate before another big run. I think the VIX, we could see the VIX really start to take off over the next several months or so. All right, and that leads us to our SPY. I'm gonna take a look at the ETFs right now. So here's our S&P 500 ETF at the SPY, the SPY, knocking on the door of support, folks. And with all the momentum shifting negative, I think we're going to end up breaking that level. Now we are showing some this is weekly chart, so we are showing some oversold conditions. Could we break below this level of support right now, right around this 419 level? We could definitely break that in no time. And then when we get below 419, folks, we could see price action race towards that 200-day moving average right around 393. So keep that in mind as we go through the next couple of weeks. That was a weekly chart. Switch to a daily chart. Look at the CCI here at the bottom. Not quite, it hasn't broken below oversold territory. So we could be going much even lower while we're hitting these levels. Right now, the price action is actually hovering right around a 200-day moving average on a daily. It looks like it wants to break it in a major way with increasing volume. Also, so we could be going lower right here, as we go through next week. So we could easily break this level of support right around this 419-ish level. We break that, we can see price action going much lower. And again, if we break that level, we can see price action head all the way down here towards this 200-day moving average, pushing price action close to 400 on the SPY. So we have to see how that pans out over the next couple of days and next week or two. All right, let's take a look at the DIA, which is the ETF for the Dow Jones. Again, it's a weekly chart, already looking very weak, struggling to hold a 50-day moving average. And look what's happening. The 200-day is not too far off, right around 318. So if we do not get a strong push above this 200-day moving average, above this 50-day moving average as we start next week, then we could see an immediate move back below this candle here, below 330, and head towards that 319, 320 level on the DIA. That's a weekly chart. Switch to a daily chart real quick. As you can see, we are already just trickling below that 200-day moving average in a major way. And we're not even at oversold levels on the CCI. Wins percentage is just hitting that level. Full stochastic is not even oversold. So we could definitely take out this low here, this level of support here, which is around 330. definitely take that out next week and plunge and go much lower real fast. So it's something to pay close attention to. Let's look at the triple Qs. Same scenario. If you look at the CCI, wins percentage and the forecasters have not really hit oversold in a major way yet. So we could be going much lower right here, right now, as we start next week at a level of support right around 354. If we break below that on the Qs, we can see the move straight down towards that 200-day moving average, which is hovering around 337. Look at a weekly chart on the Qs. Again, increasing volume on last week as we are heading down. It's like we tried to get a bounce off of this level before and came right back down to it. So I think we're going to break this level on the Qs. I think the Qs is more in store to continue lower immediately as we start next week. So that's something to pay close attention to. Next level of support, right around 335. And then we break that. You can see price action go all the way down to right around towards 317. That's on the Qs. Take a look at the IWM. Oh, I'm sorry. Let's go look at a daily chart of the Qs. There's a daily chart of the Qs. Again, not in oversold territory according to the CCI for stochastics and the wins percentage. Like we still has a little bit ways to go. We'll get deeply oversold. It looks like this level of support is definitely going to be broken. We tried to get a bounce over this level before back in the beginning part of October and failed. Got a bounce back up to above that 50-day moving average, came right back down below it. And then we're testing this level again. I think we're going to punch right through it. And if we do punch through this level of support, this 354, we could be headed straight down towards this 200-day moving average, which will be price action right around 338. So I think we're looking for some brutality in the markets probably over the next week or two. Let's look at the IWM. I think the Russell is the weak link of them all because it's been staying in oversold territory. So it is definitely weak in a major way. Let's take a look at a weekly chart because the daily chart doesn't really tell the whole tale. Now, we're going to look at a monthly chart as well because the IWM, folks, it is at a critical state. I'm point out here. It has been battling with this level of support way back since July of 2022, folks. It's been battling with this level of support way back since 2022, of July 2022. So well over a year. Folks, if we break below 165 on IWM, that's going to be the key signal that we are in store for a massive move to the downside, and the other indexes will eventually follow. So again, we have tested this level. 1, 2, 3, 4, and we had another test, number 5. Do we break here and go lower? If I was a bet man, that is my guess. I would say yes. So look to see if the IWM gets a bounce here. If it doesn't, then that means you can almost count on other markets start to follow the IWM. Let's take a look at a monthly chart on IWM. It looks dire. It looks dire, folks. Looks like we are definitely in a strong downtrend even on the monthly chart. And it looks like it really wants to break this level of support, folks, in a major way. I do have a couple of IWM puts on, and I do think they could be really, really ramping up to the upside and gains with these IWM puts. IWM is the way to go if you want to really short this market in a major way because it's like it is the leader as far as direction in the overall market. See how we've been hovering around this level. We've been hovering around this level of support, folks, for well over a year. It looks like it's about to be broken. And I want to point this out. If IWM breaks this level, I'm not saying where we go, but just keep in mind the 2020 lows are right there, and that's right around 100. So do we go that far? We got to wait and see. But could we definitely come down and test this 200-day moving average on a monthly? We could. That is a huge possibility. And that would push price way down around 125, between 120 to 125. So IWM is something to really pay attention to over the next week or two to see if we break this 165 level. If we break that, we got to see what happens next and how far down could price action start to roll. Okay. All right, folks, that is all I have to offer you guys for this week. Hopefully this is something that can you guys can use. Again, my personal downside put spread positions, I have IWM, and I just closed out one on Lowe's, LOW, for a 110% gain. So downside positions are definitely working in a major way. If you continue to monitor them and just let those ride if it's one that works in your favor. All right. Okay, folks, that's all I have to offer. I will see you guys on the next video.